All right, let's dive in. We're looking at Copart Incorporated today, ticker symbol CPRT. You guys want to know if this is a good investment or not, and we're going to break it all down for you. By the time we're done, you'll be a Copart pro.
You'll be able to hold your own in any conversation about it. What I find really interesting here is Copart's position. They pretty much dominate their market,
Okay,
and they've got really solid financials. Plus, they seem to be riding the wave of some wider trends that are happening in the automotive industry right now.
interesting. Yeah, so I guess for anyone who's not familiar with Copart, maybe we should start with like a real quick overview of what they even do.
Definitely. Copart is all about online and vehicle options, so they're the main platform for selling salvaged and used vehicles, primarily to businesses. We're talking like dismantlers, rebuilders, and dealers, that kind of thing. But they do also cater to individual buyers as well.
Okay, so they're kind of like the eBays of beat-up cars.
Yeah, pretty much. But on a much larger scale, of course.
Right, they're not some small operation.
Definitely not. Copart's got a global footprint with operations across North America, Europe, they're even in the Middle East. They have this massive network of physical locations where they process and store vehicles. And then they've got their online platform that connects all these sellers with buyers worldwide.
So it's this interesting mix of physical and digital, which makes sense if they're the, like you said, dominant player.
Right.
So we've got their recent performance highlighted here, and it seems like things are looking pretty good for them, right?
Yeah, their second quarter results for fiscal year 2025 were really strong. They pulled in over $1.2 billion in revenue,
Wow.
which is a 14% jump compared to last year.
14%, that's pretty significant growth. What's driving that?
Well, there are a few factors we can point to. For one, there's this rising trend of what they call total loss frequency in the US. Basically, more vehicles are getting damaged so badly it's not even worth repairing them.
Oh, interesting.
Yeah, and that works out well for Copart because all those totaled cars, they end up in salvage auctions, which is Copart's specialty.
So more damaged cars, more business for Copart. I guess that makes sense. But they must be doing something else right, too, besides just, like, being in the right place at the right time.
Oh, absolutely. A big part of their success comes down to their investment in technology. They've been right at the forefront of this AI-powered image recognition stuff, which lets them assess vehicle damage really accurately.
So they can figure out how much a car is worth, even if it's completely trashed.
Exactly. And then they've also developed this proprietary platform called Title Express that streamlines like all the paperwork involved in transferring ownership of a vehicle. They process over 1 million titles a year using this platform.
1 million. Wow. It sounds like being super efficient is a big part of their strategy. I mean, I imagine having good relationships with insurance companies is pretty key in this industry too, right?
Oh, for sure. Insurers are a major source of vehicles for Copart's options. A huge chunk of those total cars we were just talking about, yeah, those come directly from insurance claims. Having those close relationships with the insurance companies ensures a steady stream of inventory for Copart to sell.
Yeah, and I can see how that would be crucial. Makes you wonder how those relationships might change as technologies like AI and self-driving cars become more common, though.
It's definitely something to think about. The whole landscape of insurance is evolving.
Yeah, for sure. But it sounds like Copart isn't just sitting back and letting things happen to them, right? They seem to be actively exploring new opportunities for growth as well.
Oh, yeah, definitely. Expanding into new service offerings like that Title Express platform we talked about, that's one way they're growing. They're also seeing growth from sellers outside the insurance world, things like financial institutions, rental car companies, even corporate fleets.
Interesting.
There's a lot of potential there to tap into markets beyond that traditional insurance space.
So Copart's looking pretty good so far. They're a market leader, strong financials, solid business model, and they're always looking for ways to grow and evolve. But let's be real, there's always a flip side, right? What about the potential risks and downsides we need to consider?
Well, of course. I think the big one right now is the overall macroeconomic uncertainty in the world. If the economy slows down, people tend to drive less, which means fewer accidents and ultimately fewer cars ending up in Copart's auctions.
Makes sense.
And then there are some concerns specifically about the volatility of Copart's dealer services business. They call it CDS. It's this platform that helps dealers sell cars to each other. But it's been a bit unpredictable because the wholesale market can fluctuate so much.
So external factors like the economy and internal challenges like the performance of CDS could cause some bumps in the road. All right, so let's talk about their stock specifically. How are analysts viewing Copart as an investment right now?
Well, there seems to be a general consensus of cautious neutrality.
Cautious neutrality.
Yeah, that's the best way to put it, I think. Copart's stock is currently trading higher than what some analysts think it's actually worth, which suggests it might be a bit overvalued.
I see. That makes sense, especially since Copart hasn't given any concrete guidance about their future earnings. Makes it tough for analysts to be super enthusiastic about the stock, right?
Exactly. While Copart's long-term prospects look pretty promising, especially with that rising total loss frequency trend we talked about, the fact that there's no clear short-term guidance combined with those potential risks is making analysts hesitate to give it a strong buy recommendation.
Okay, so mixed signals, but definitely a company worth watching closely. We've talked a lot about Copart's present, but now I'm curious about the future. What are some key questions investors should be thinking about?
Well, if you want to look at the big picture, you got to ask, what's the long-term outlook for the entire vehicle salvage auction market? How will trends like electric vehicles and self-driving technology impact Copart's business? Will they be able to adapt and thrive as the automotive landscape keeps evolving?
Those are some excellent questions, and ones we can't answer for sure today. But hopefully, this deep dive is giving you a good starting point to think critically about Copart's future and, whether it aligns with your investment goals. We've covered a lot of ground so far, what Copart does, how they've been performing, what's working for them, and maybe some things that aren't working so well. Now, I think it's time to dig into their financials a bit. What can you tell us about the numbers? Like, how are analysts actually valuing this company?
Yeah, so Copart's revenue has been, steadily climbing over the past few years. In their most recent quarter, they hit almost $1.2 billion. And their profitability is pretty impressive. Their operating margin has been consistently above 30%.
That's a really good margin. What about their earnings per share? That's a big one for investors, right?
Oh, absolutely. Earnings per share, or EPS, is a super important indicator of how profitable a company is. And for Copart, their EPS has been trending upwards too. They reached $0.40 per diluted share last quarter. That steady growth in earnings, it's a good sign. Shows they're effectively like turning revenue into profit.
So the financials look solid, but what about the actual valuation of the stock? Is it priced attractively right now?
Well, that's where things get a little tricky. We mentioned earlier that Copart's stock is currently trading higher than some analysts think it's worth,
Right.
which could mean it's overvalued. You've got analysts with price targets all over the place. Some are saying it could go as high as $70, while others are much more conservative. It's hard to say for sure with the limited data we have.
So a bit of a debate going on. What are analysts even looking at when they're trying to figure out what Copart is actually worth?
Well, they're looking at a lot of factors, really. Past financial performance, projected growth rate, and the overall risk associated with the company. Plus, they're taking into account industry trends and what the competition looks like. One of the key metrics they use is the price-to-earnings ratio.
The PE ratio.
Exactly. Copart's current PE ratio is around 39, and that's actually higher than the average for the S&P 500.
So a higher PE ratio, that usually means investors are willing to pay more for the company's earnings because they're expecting big growth in the future. But like you said, there is some uncertainty about Copart's short-term outlook.
Right, and that lack of specific guidance from Copart for the rest of the fiscal year, well, it makes it hard for analysts to project their earnings and revenue confidently. This uncertainty contributes to that, neutral stance many analysts are taking on the stock.
So strong financials, but maybe a little pricey, and some questions about the future. What's the bottom line for investors who are trying to make sense of all this?
I think the key takeaway is that Copart is a good company, fundamentally. They're dominant in their industry, and that industry is growing. They've been consistently profitable and have a good track record of generating cash flow.
Okay, that sounds pretty good, but I feel like there's a but coming.
But the current valuation might be a bit high. And those potential risks we talked about, like the macroeconomic environment and their deeper services business, we can't ignore those. Investors need to really weigh these factors and decide if Copart's potential for growth justifies the current stock price.
So it's all about finding that balance, looking at the whole picture. What specifically should investors be watching moving forward to make their decisions?
Keep an eye on that total loss frequency trend. If it starts to go down, it could mean Copart's core business is slowing. And pay attention to how their dealer services segment is performing. If they can stabilize that and make it more profitable, it would definitely boost their overall growth outlook.
And of course, any news from Copart themselves about their financial guidance or any changes in their strategy, that would be important to follow. This has been a really informative look at Copart so far. Their business model, financials, potential risks, we've hit it all. But now I think the big question is, what does the future hold for Copart as the auto industry continues to evolve so rapidly? We've learned a lot about Copart, how they operate, their financials and the potential challenges they face. But now I want to look ahead. What's next for Copart? How will they handle this crazy, rapidly changing automotive landscape?
Well, that's the million-dollar question, isn't it? The automotive industry is transforming before our very eyes, right? Electric vehicles, self-driving cars, all these new ways of getting around, like ride sharing.
Right. It's exciting and a little overwhelming, to be honest.
It really is, and it makes it hard to predict what's going to happen.
Exactly. So how's all of this going to impact Copart's main business? Auctioning off those salvage vehicles.
Well, there are some different schools of thought on this. Some analysts believe that the rise of electric vehicles could actually be a good thing for Copart.
Oh, really? How so?
Well, because EVs are more complex and way more expensive to repair, especially when you're talking about damage to the battery.
Ah, I see.
So this could lead to a higher total loss frequency, meaning more of those EVs could end up in salvage options.
So instead of being a threat, EVs could actually become a new source of inventory. That's interesting. What about self-driving cars? I keep hearing that autonomous vehicles are going to make accidents less likely. So wouldn't that mean fewer cars needing to be salvaged?
Yeah, that's a good point. If autonomous vehicles do what they're supposed to do and make our roads safer, yeah, we could see fewer accidents over time. But a fully autonomous world, that's still a long way off. In the meantime, there are still going to be accidents. And actually, the accidents that involve those early generations of self-driving cars, those could be even more complex and expensive to repair. So we might actually see more total losses in the short term.
That's a good point. So the transition period to full autonomy could actually create some unique opportunities for Copart. Anything else we should be thinking about?
We should also consider how car ownership is changing in general. With things like ride sharing and those car subscription services becoming more popular, people might own fewer cars overall.
Right?
And that could have a ripple effect on both the used car market and the salvage market. Fewer cars on the road, fewer cars ending up in auctions.
It sounds like there are a lot of variables at play here. Really hard to say for sure how things will shake out. But it definitely seems like Copart needs to be adaptable, to stay on top of all these changes.
Oh, absolutely. They've got to be proactive and stay ahead of the curve. They need to understand how all these new technologies and how those consumer behaviors are going to affect their business.
Like maybe they need to develop some expertise in assessing the value of a damaged EV or a self-driving car.
Exactly. And maybe look into partnerships with companies in the mobility space to get access to new sources of vehicles for their options. The good news is they've already proven that they're willing to adapt and innovate. Think about Title Express or their move into those non-insurance markets. They're going to need to keep that going if they want to stay ahead of the competition.
This has been such a fascinating deep dive into Copart Inc. We've taken a close look at how they operate, their financials, and the broader trends shaping the future of the entire automotive industry. So if you're listening to this, what's the main thing you should take away from all of this?
I think the takeaway here is that Copart is a company at a crossroads. They're in a really strong position right now, but they've got both opportunities and challenges ahead of them in this market that just won't stop changing. How well they innovate, adapt, and take advantage of those emerging trends, that's what's going to determine their success. For investors, Copart is a really interesting story, but it's complicated. You really need to weigh their potential for growth against their valuation and, just the uncertainty that comes with trying to predict the future of the automotive world.
Really well said. And with that, we wrap up our deep dive into Copart Inc. I hope you feel more informed about the world of online vehicle options and, that you can make some smart decisions about whether Copart fits into your investment plans.
And remember, all investments carry risk. Past performance is never a guarantee of future results, so do your own research, a lot of it, and know your own risk tolerance before making any investment decisions.
And hey, if you like this deep dive into Copart, make sure you hit that subscribe button and the bell icon so you don't miss out on future episodes. We'll be back soon to tackle another company and another set of exciting challenges. Thanks for joining us.